Well, life will soon get easier. That's according to the interest rate crystal ball, with predictions of 4 rate cuts next year, the first as early as February. But we've learnt the hard way not to always trust what we hear. So let's ask Nine Money editor Effie Zahos. Effie, this does feel like a little bit of hope.
Yeah, it is, and I think we need that because we've got to understand that we have had 13 rate hikes. This cash rate, the official rate's been sitting at 4.35 since November. So when you look at what a household is trying to juggle right now, it's beyond imaginable. It is beyond imaginable. So you're looking at a household probably spending around $4,000 odd per month on an average mortgage, say around $6,000. That's $50,000 a year, Ali. I'm talking about after-tax income.
Yeah.
So you've basically got one person working around the clock just to pay
the mortgage.
Just to pay the mortgage. So when you hear something like this, you think, yes, I've got this relief. Yes, yes. But as you rightly point out, we've been here a little bit before. We've heard this and we've made decisions based on what, are the predictions. But we've got to have this hope. And the interesting thing is, this has come from the ASX futures that they're saying 4 rate cuts next year. Major banks are also predicting something similar. You've got some even as early as November this year, and some even saying, up to 5 rate cuts. You're hearing a whole lot of different things.
But what are they then basing this on at the moment?
Yeah.
Like, why are they then saying that this is the case? And also, and I think this is where people get confused, it wasn't that long ago the RBA sort of basically said to us, nothing's happening with rates in the near future.
Yeah, and you've got to remember the role of the RBA and the governor is now, they're very cautious. They've come out before saying, hey, we're not going to see any rate hikes, and people have gone off and done their everyday business with it. So their role is actually to squash it, calm it down, not make us spend. They've got one tool, and this is one hammer, and they built that. And this is all they've got. So yes, they're going to be cautious, but let's break it down. They are moving solely on numbers. So we won't get to see the next inflationary figures. The consumer price index is not coming out till the end of September. So that's before the RBA meets next. So you've got some economists, like the CBA, has come out and said that, you know what, we may actually see this number go in the band between that 2 to 3% is what they want, this inflation number. So how are we getting inflation down? Because it's so sticky. I'm still getting my insurance bills. It's gone up 20% and so on. So some relief there in the energy rebates. That's going to bring the number down a little bit. You've got some oil prices. That could bring some relief down a little bit. Rent, finally seeing that kind of being a little bit more slower. So there's some key things there that are happening. We're also not spending. Who has this money not to keep on spending?
So does that mean, like, if you're on the brink right now,
Yeah.
and you are sitting there at home as a family going, what do we do? Do we just get out and cut our losses, or do we hold on?
Yeah.
When you hear this news, you think, you know what, let's just wait.
Yeah.
Is that the right thing to do in these circumstances?
Yeah. And that's where you could find yourself in some trouble, because I get excited hearing, yes, finally we'll get a rate cut and this will be good. You've got to remember that should this happen, the first rate cut would be about, say, $100 on the average mortgage of $600,000. And then how fast are they going to come? Are they going to be consecutive? Because the RBA doesn't meet as often. So it could be 8 to even 12 months until you see the impact of all these rate cuts flow through. So
I think then, because a lot of people are really stressed, right? We're coming into Christmas, and this should be a time of year that we love, we all get together, but it causes more financial stress, I reckon, than any other time of the year.
Yeah.
So people are holding on to this, but then you've got the other side of the coin as well. This might be great if you've got a mortgage, but I guess for people like pensioners or people who've got their savings account, they won't be as excited to hear this news.
And this is the thing, the gap between the haves and the have-not, Ali, it is terrifying. And this is where we haven't seen something like this, and we may not again until, say, another pandemic. But the issue is here, you're absolutely right. You've got those people that are on a fixed income, pensioners that are loving being able to get 5% plus on their savings accounts. Yeah. You can bet your bottom dollar when rates do drop, those savings accounts are going to drop like a lead balloon. So they're not going to be happy. Then you've got the property market that if rates fall, first-time buyers, they're going to be thinking, well, I'll never be able to get in there. So it's a case of that the RBA has hit really the backbone of this country.
Okay, so I guess what you're saying is we just need to wait and see what happens, and it'll play out as it plays out.
If you're not on a good rate, don't wait for the RBA.
Okay.
Go and look for cheaper rates now. There are plenty under that 6% mark. So, yeah, talk to a broker, a lender, but get a better deal.
Okay, thank you, Effie. Appreciate it.